Hi there, and thanks for joining me. So in this video, what I'm going to do is I'm just going to talk very quickly about an options trading strategy called the one ticker retirement plan. Now, I haven't created this. This is a strategy from one of the world's leading options traders, Larry Benedicts, and he's made millions of dollars with this strategy called the one ticker retirement plan. And I'm just going to talk a little bit about it in a minute and how you can get more information on it if you want it. But what I'm going to do is I'm just going to start the video by going over the basics of options trading. Now, first question that needs to be addressed is why would you want to trade options? Well, basically we trade options in order to make money. That's the whole reason for it. And being completely honest with you, if you're just starting with options trading, you're not going to make millions of dollars, in the next sort of couple of months. Really your realistic goal is to create really nice side income alongside your job or your business where you can make returns of up to $1,000 a month or more. Now, this isn't set in stone. Of course, you can make a lot more, and of course, you can lose money as well. But really, I think when you're starting off options trading is to understand it, play some safe trades, and really aim to make $500 to $1,000 a month. So, basically, what is an option? Because options can sound very intimidating to people who don't know them. So, here's basically what an option is. An option is a contract between two parties for the purchase or sale of an asset at a specific price by a specific date. So basically, all an option is just a contract that gives you the right to buy or sell a stock at a specific price at a specific date. But you're not obliged to buy or sell the stock. So, if we compare that to buying a stock directly, if you buy a stock directly, you go to your broker, you buy the stock, and you make money wherever the price rises or falls. But with options, you take out an options contract, and that options contract, depending on which one it is, gives you the right to buy or sell that stock if you want to, depending on your strategy. So let's just sort of break it down. Just very quickly, there's basically four underlying parts to an options contract. So you've got the underlying asset which you're going to buy, or take the option out for, we'll call it stock X. You've got the strike price, which is the price in the options contract that's set. This price can't change, where either gives you the right to buy the stock at that price or to sell the stock at that price. You've got something called the expiry date, and basically you can exercise the option either to buy or sell that stock at or before the expiration date. And then you've got something called the premium, which is basically the cost to actually take or purchase or sell the option. So let's sort of go into an example here. So we've basically got two people. We've got the option buyer and the option seller. Now, the underlying asset for the option is, we're going to call it stock X. The strike price is $100. Expiry date, December 30th. And the premium to take out the options contract is $15. So, in exchange for $15, Justin has the right to buy stock X for $100 to share. Stock X is the underlying asset, and $100 is the strike price in the contract from Jocelyn anytime on or before December 30th. So let's just break this down. So Justin, the options buyer, pays the $15 premium to buy the options contract, has the right to buy the underlying asset from Jocelyn at $100 a share. Jocelyn, the option seller, collects the $15 premium, has the obligation to sell the underlying asset to Justin at $100 share. So hopefully that has helped you sort of understand what options are. And there's basically two kinds of options as well. There's something called a call option and a put option. Basically, you take a call option out if you believe the price of a stock is going to rise, and basically you're going to take a put option out if you're bearish and you believe the price of a stock is generally going to fall. And there's basically only 4 trades you can make with options. And there's only 2 things you can do in an option. You can either buy an options contract or you can sell it. But there's 4 trades you can make. So you can buy a call option if you're bullish and you think the market will go up. And you can buy a put option if you're bearish and you think the market will go down. On the other side, you can sell a call option if you're bearish and you think the market will go down. But you can sell a put and you're bullish and you think the market will go up. And that, in essence, is the very basics of options trading. So hopefully that sort of helped you understand what options are, with the terminology and a little example. But I know options trading recently has gained quite a lot of negativity because, people, there's been various things and people sort of see options trading as gambling. So basically, is options trading gambling? The quick answer to that is it depends. If you basically buy or sell options contracts on stocks, you've no idea what you're doing and there's no strategy behind it, yes, it is gambling. But if you're following, a preset, pre-designed strategy that you've put into place, then options trading is no longer a strategy because you've got a process in place, to identify stocks that you believe will rise or fall, that you can then buy or sell with options contracts. And that brings me to the one ticker retirement plan, because this is where this all comes together. Because the one ticker retirement plan is the strategy that Larry Benedicts devised that's made him and his clients millions of dollars, and he's crushing it in 2022. So what is the one ticker retirement plan? So basically it is a process that allows Larry to identify stocks that can then be traded using options contracts. So the thing is with Larry, he doesn't pick loads of different stocks and trade them at the same time. His one ticker retirement plan, there's a couple of processes in it that, depending on the market conditions, he will identify a stock, and then what he'll do is he'll either take a call option out on it if he thinks the stock will go up, or he'll take a put option on it if he thinks the stock will go down, and then he will trade it. And that is basically the basics of the one ticker retirement plan. Now, if you want to go deeper into options trading and you want to learn more about the one ticker retirement plan and get an options trading PDF that sort of gets you trading options fast, then I invite you to basically watch Larry Benedicts' presentation where he goes deep into his one ticker retirement plan. And as a special bonus, you get this free options trading PDF. We'll go over how to start trading options fast. So if you want to get Larry's interview where he goes into his one ticker retirement plan to get the options trading PDF, just click the button, enter your email address. It's completely free. And on the following page, you'll be taken to this interview and you can download your options trading PDF. So I hope you found this video useful. If you like the video, why not like it and share it with your friends? And why not subscribe to the channel for more content like this? So anyway, thanks for joining me. Hope you found the video useful, and I'll speak to you soon.